Good afternoon, everyone. Welcome. So glad to have you here at our, fourth annual 2023 Megatrends presentation. Usually we are focused only on Latin America when we do these events. This year, we're very excited to actually be hosting a 2-day event entitled Global Payment Megatrends. Today, we're doing a Latin America deep dive, and tomorrow we'll be extrapolating the trends we look at today to the global level. So we're very excited that you're here, and we're pleased to be bringing this content to you. If we go on to the next slide, we'll get right into our introductions, and so you are all familiar with who we are and what we're going to be speaking about today. Our standard legal notice, please take note, and we can go ahead to the next slide. I want to formally introduce myself. My name is Lindsay Lear. I lead the payments practice at America's Market Intelligence. Many of you are very familiar with the AMI brand, and I'm really excited to announce or remind our audience that the AMI brand for the payments industry has now migrated into PCMI, or Payments and Commerce Market Intelligence. You'll still see the PCMI logo living alongside AMI for a while. But in December of last year, we officially announced the rollout of our global presence, moving beyond just Latin America, looking at APAC, Asia, EMEA, and North America. We're the same team, we're the same faces that you've become accustomed to, now with just a bigger scope and a bigger vision covering global payments. The industry got to a point where we couldn't stick to Latin America anymore. Our clients require it, our network requires it. And so tomorrow you'll have the chance to meet some of our global partners and do a deep dive into what's going on at the global level and connect the dots between Latin America and other world regions. So I hope you're able to join us tomorrow at the same time as well. Let's go ahead. Just to give you all a little bit more detail on our new scope as a company under PCMI. You all know that we cover the Latin America region very extensively. We've also built dedicated teams in Barcelona, in Johannesburg, in New Delhi, in Singapore. And from there, we're able to cover over 50 global markets. And that's increasing as clients are looking into new geographies. We're expanding our network and our knowledge base to help our clients move seamlessly across borders. So stay tuned. I hope that you are excited about this announcement as we are, and that we can partner not only in Latin America, but in other regions as well. Okay, let's go ahead. A couple just introductions. Again, my name is Lindsay Lear. I will be guiding us through the content today, and I'm very pleased to welcome Sullivan Rocha from our team. Brazilian specialist, was very instrumental in doing a lot of the research and analysis that we're going to be presenting today. So welcome, Sullivan.
Thank you, Lindsay. Glad to be here.
All right. So what we're going to talk about today, there's so much to cover. I mean, you all who follow us and follow our coffee chats, you know the wide spectrum of topics that we cover and that we look into. And so we struggled with figuring out, how do we boil this down into a 1-hour presentation? What we really decided was most important to cover was a deep dive into PIX. And I apologize for those of you who don't who are not so interested in the Brazilian market. Usually we're very democratic in our coverage of the region, but we really felt it was necessary to take stock of what happened with PIX last year and make some key predictions. It has been so transformational. It's important for us to really get clarity on that. So we're going to start off with looking into PIX. What can we expect in 2023? Followed by an analysis of the expansion of low-cost money transfers around the region. PIX has been so influential at the global level as well as regionally, and we're seeing this trend expand across Latin America. And then we'll end it with tying it all together with a look at open finance and what impact that might be having on the acceleration of low-cost money transfers, and then some final projections for the year. So with that, if we go to the next slide, we'll start off with our analysis of PIX. And our title of this section is that 2023 could be the year that cards lose market share. So this is very important, right? It's important for legacy players. It's important for fintechs, banks, networks, merchants. this new competitive dynamic is really important for us to understand. So I'm going to invite Sullivan to walk us through this section of the presentation. Make sure that you're asking questions. Right at the bottom of your control panel, you'll see a Q&A icon. Please go ahead and put in your questions. We're going to have a Q&A session at the end because I know this will bring up a lot of stuff that we'll want to talk about. So with that, I'll invite Sullivan to take us through this content.
Okay, thank you, Lindsay. Glad to be here. I'll present a little bit on Pix, the payment method, as she mentioned, that completely changed the payments landscape here in Brazil. If you go to the next slide, please. So basically, the number of transactions increased greatly. For example, in December 2022, we had a new record of 104 million transactions in a single day. And not only the transactions, but the volume is also important. The volume is also competitive, though not as impressive as the number of transactions, but it is something to consider. And it is still growing month over month. And it's also worth noting on this second chart that Bolero's volume has not decreased, indicating that Pix is cannibalizing cash rather than cash-based payment methods. Next, please. Okay, so talking about cannibalizing cash, we can see that the share of Pix in the financial volume of payment methods increased in the last quarters, while the share of withdrawals decreased. So less withdrawals, less cash on the country. And on the second chart, we can also see that in 2021, the total amount of money circulating in the country fell for the first time since the Plano Real in 1994. So it's safe to say that Pix has won the cash share and has proven to be an extremely effective tool for cash displacement. Next, please. Okay, so here on this slide, it's important to notice that we are only talking about P2B transactions, so person to businesses or person to merchants. And here is the data by quarter since 2019. ABEX has not yet published Q4 data for 2022, but we don't have the updated card data, but we can see that Pix, the black line, is starting to compete with debit. On the second chart, we can see the volume. Debit is almost matching, Pix is almost matching the debit card volume. And we will see how debit performs in the future. However, if debit cards begin to stagnate or is low, we can assume that Pix is now stealing the potential market from debit cards. And right now we are seeing inflection points at which Pix may and most likely will begin to withdraw future shares from cards, maybe debit cards and also credit cards with new solutions. And Pix is a great solution within e-commerce to take away debit card volume. But what is interesting about that is that debit has never been fully enabled for e-commerce, and Pix has been very successful in this digital environment. And when you look at the data of average ticket, we can see that there's been a theory that Pix isn't really competing with credit cards because the value proposition is so different. But what is also fascinating is that the average ticket of a Pix P2B transfer is more than twice of a credit card. So it's being used for high ticket purchases as well, which you can see a lot in e-commerce. Merchants are aggressively promoting Pix with incentives, and we will see some examples of that going forward. Next, please. Okay, so thinking about who is using Pix on the consumer side, it has already reached 80% of Brazilian adults, as well as 11 million businesses. So another reason not to think that Pix is going away is that it's heavily concentrated among young users, right? And on the first chart here, the dark red represents the percentage of Brazilian population distributed by age group. And the bright red represents the percentage of Pix users distributed by age group. So we can see that it is skewed young. And so those young users will continue to use Pix as they mature and up and come. And on the second chart, we can see that it is also not true that Pix is concentrated in the country's urban centers. The distribution of the Brazilian population by territory in comparison to Pix users. You can see on the second chart, again in dark red, the figures are evenly distributed, uniformly spread across the nation, and with just a slightly higher penetration in Southeast, but has been widely embraced throughout the entire country. So we can see that it's not concentrated in urban centers, and the numbers are very corresponding and spread across the country. And we have already 140 million users, both individuals and businesses, and this is growing month over month as well. To the next, please. Okay, so here talking about the use cases of Pix, there are 9 potential use cases. So we have 3 players in this environment: people, government, and businesses. So we have 9 connections between the 3 players and between themselves. And we can see that the winners are P2B and B2B, so person to person and business to business. And P2P is quite obvious because of the easiness in cash displacement and zero cost transfers between persons. But B2B is a potential area for further research to understand the use cases for businesses and why this volume is so representative right now. And regarding P2B, person to business, it has consistently represented around 10% of the volume. It's a low volume so far, and I will explain the reasons for that in the next slides. And here, what stands out to us is that all use cases involving government are still have a very low volume share yet. Of course, this depends on updating the billing, receiving systems of each government institution to start accepting Pix. But right now, it's not so used by the government as by the persons or businesses. Next, please. Okay, so here thinking about merchants, another huge question we always get is how much penetration does Pix have upon businesses? And this is considering both in-person and e-commerce. So Pix is currently being accepted by 11 million businesses. That is equivalent to 55% of formal companies. It took, and I think what is important here is that it took years, decades for POS penetration to reach anywhere near that. So it has ramped up extremely quickly. And when we think about the informal economy as well as the formal economy, penetration drops to around 27, 28%, but that is still pretty significant. And of course, we expect the number to increase. And just this week, I saw a study that estimates that in e-commerce, this rate is 78%. So we see that the biggest impact of Pix is on P2P transactions is on the digital environment. So for e-commerce. Okay. So here, the Brazilians will know this, but we can see that large merchants are aggressively promoting Pix in Brazil with sales, with discounts, with promotions, with all sorts of things. And this tells us that merchants really favor Pix as a payment method, but most likely because of the low cost. So it's cheap to accept, and it is real time, of course. And this occurs despite the fact that Pix does not necessarily include all the automation and reconciliation tools. Pix has not been designed to communicate with these large merchants, huge complex systems. And here we can see some examples like Mercado Livre, Casas Bahia, Magalu, offering discounts, offering promotions. And although credit would be considered to be the preferred payment method for these high ticket items, these merchants appear to favor and actively encourage the use of Pix. And as a result, you are starting to notice an increase in the usage of Pix for larger ticket items. So as I said before, the average ticket for Pix P2B is higher than the credit card. Next.
Sullivan, let me pause you for a moment, if I may, because I could go back to the previous slide. I want to, there's a very relevant question from the audience here. To this point, will Pix compete with debit cards for in-store payments also? And I know it's very hard to make a prediction, but can you share your thoughts on that? And also maybe as a Brazilian consumer, right, fully digitized, you have multiple credit and debit cards. What is the experience like at in-store when you're making a purchase? And are you personally incentivized or open to using Pix when you shop?
I think the change from debit card to Pix, it needs to be smooth. So what I'm saying here is that in the past 3, 4, or 5 years, we are seeing people starting to use contactless payments. So people are very used to only tapping their card at the POS, and Pix doesn't have such a great experience as this, isn't such an easy experience as this. I know that as on the picture is presented, like there is a QR code, you just need to read, but you need to do a lot of more steps than you need to just when you just type your card. So I believe that the experience is the key to answer your point. With improvements on Pix, with contactless payments, with tokenization in smartphones or something like this, to do a Pix, I totally agree that this will change completely the debit card behavior of customers, of consumers. But without that, I don't see it is a path with a lot of more friction to read the QR code, to present the number, to include the amount, to type in, getting your bank app, first of all, and then doing all these steps, then just tapping your debit card on the POS. Great.
So again, hard to predict. The volume of P2B Pix really rivaling debit, it would lead us to the conclusion that it will begin to compete in store. But at the same time, debit is almost not accepted for e-commerce. And so that's a question that still remains to be answered. You know, how much of this is online versus in store? And what will that projection be? You know, I think that's a great question that we will be looking at and monitoring over time.
Yeah,
so and, pardon the interruption. We can continue.
No problems. Just one more comment on that. We can see that the card non-present transactions, the number fell when Pix rose. So I believe that for e-commerce, this is almost, I'm very comfortable to say that this is true. Like for e-commerce, Pix is gaining the share of debit card. But for present card, for in-store payments, I would say that this will still require some time and developments on the Pix front to the stores really offer Pix as a smooth payment as it is cards.
Perfect. Okay. So we're getting a lot more questions. Thank you. Keep them coming. We're going to continue to address them at the end. Okay, so and there is reason to believe that merchant adoption will continue to grow based on the favorable pricing that they received for offering Pix. And we are also seeing government mandates for Pix acceptance. So last month, this is a news from the last month, an agency from the Ministry of Mining and Energy issued a new rule requiring
utility companies to accept PIX for payment of energy bills when the customer requests it. So, and this has the potential to be a game changer on the Brazilian market. This represents a massive volume of transactions. And this specific volume is a volume that traditional card acquirers have not been able to penetrate. So this is a different volume than the cards. It's more volume for PIX. And it is also a recurring transaction, which is very advantageous for cards and traditional payment methods. And now it will be possible to pay with PIX, which may also have an impact on other public utilities, gas, telecom, internet, sanitation. So we can see that we can see a new trend here. Like this will impact the market this year, the following, but for sure we will see this change in the market. Next slide, please. Okay, so we expect PIX to continue growing based on the merchant factors that we just discussed. But there are other things happening within the central bank that may also continue to support the continued growth of PIX. And this slide has a lot of information. It's kind of technical, but I'm going to break it down. First of all, PIX has established a kind of big layered approach to connecting to PIX and the system itself. So there are basically direct participants and indirect participants. And the direct participants are those who have an actual physical fiber optic connection to the central bank. And this, of course, requires a high level of investment in infrastructure. And those are mostly banks and traditional financial institutions. And you can also connect to PIX being an indirect participant. So here is more common to see to have PSPs, payment institutions, or other regulated entities. And those connect to a direct participant who connects to the central bank. So each level of these layers, each level of removal from the central bank is an economic window. So direct participants, they are charged 1/10 of 1 cent of real for every transaction. So it's almost nothing per transaction. And when the direct participants offer a service to any other indirect participant, they are able to charge money. So they charge a commission. In this case, for example, here we have a 15 cents of real commission. And although this is determined by the market, it's not regulated, just an example. And then when you go one step further, when, for example, some PSP is offering PIX acceptance to a merchant, this is where you start to see the fees that we are used to, about 1% or 1 real per transaction. And of course, when we look at these fees, 1% is already well below the market average for all other payment methods, credit cards, debit cards, and even Boleto. So these companies can really leverage the acceptance of PIX. It's more cost effective than the other payment methods. And what we expect to happen is because of this layered approach from the central bank, at this level of merchant or intermediary, we are starting to see a lot of players participating in PIX, and by that, participating on the national financial system, and getting access to instantaneous transactions who may not have the best compliance, the best oversight, the best KYC procedures. And here these include crypto exchanges, sport betting, marketplaces, and those are not under the scope of the central bank. And this is creating vulnerability, and this is changing some things inside the central bank. On the next slide, please. Okay, so this vulnerability it puts the entire ecosystem in jeopardy. The central bank has the incentive to provide better oversight of these new players connecting to the PIX ecosystem. And so through interviews with central bank and others close to PIX, what we expect to happen is this trend in which the central bank is actually in a process of reducing and declining the prudential regulations. In other words, the regulations that banks have to comply. And those regulations, they are shrinking in order to enable more participants to move further to the left in that graph that we just saw. So more closely to the central bank, directly connected, or even being an indirect participant. And all of these other players in the sketchy environment can come under better supervision of the regulator, and some potential impacts that we can imagine here is the reduction of fees, removal of the middlemen, and companies getting access to even cheaper money movement systems, which will again put downward pressure on the fees, on the pricing, and on the costs to purchases. So the long-term trend is actually fees coming down, as opposite to our initial prediction, which was that fees might go up as companies add on technology or emphasize that it's always on top of things. But due to the central bank plans and wanting to create a more horizontal scheme than a vertical, this actually will going to put declining pressure on the economics of the whole system. Next, please. Okay. So basically, PIX still have some limitations. And to wrap up this discussion about PIX specifically, first of all, PIX has been extremely transformative for all the reasons mentioned. And the central bank has been extremely visionary and has done an excellent job at execution. And of course, PIX won't solve all payments in Brazil, and it has limitations, particularly when serving large merchants and in-store payments. So, for example, there is no mature and widespread integration with hardware. There are no reconciliation services, no integration with formal ERPs, tax systems, just to name a few examples. And merchants are clearly finding a way around, at least on the e-commerce side. But this does remain a challenge for PIX to scale among big retailers, supermarkets, department stores, things like that. And also the lack of direct debit and recurring payments so far, which are on the roadmap, but still are not available. And also the transaction return mechanism has a very low recovery rate, only 5% right now. So returns are very complicated with no purchase guarantees for customers, this sort of thing. And there's no official credit offering yet, although, of course, there have been several talks about this. And I think to sum up, there are still opportunities for competing payment methods to fill in those gaps. And those merchants who are drawn to things because of the price incentives require other services and support to bring that seamlessly into their ecosystem and can bring proper reconciliation, proper automation, and all the parallel services that they need. So there are a lot of opportunities to supplement PIX and ensure that it continues to scale. And I think that's it. Giving back to you, Lindsay, to tell more about how real-time payments are expanding in the region.
Thanks, Sullivan. A great overview. And I want to go just quickly to a question from the audience, because you just mentioned it. The question is about PIX Parcelado, installment PIX, and what is going on there. You mentioned quickly that the central bank has in their roadmap a credit functionality with PIX, but can you give us a little insight on PIX Parcelado, what it is and what's going on there?
Yeah, for sure. So PIX Parcelado or PIX Garantido, as the central bank called it, it was a plan on the roadmap of Pix to offer installments or to offer some type of credit. But the central bank gave a step back on that front because when they talked about this, the market already advanced. A lot of neobanks, especially, they launched new products using the Pix infrastructure to offer credit, and they call it that Pix Garantido, Pix Parcelado, sorry. And when central banks saw that, they gave a step back. They are basically waiting to see the solutions that comes up in the market for them to develop something in the infrastructure of Pix, because Pix is an infrastructure system, and right now the banks are already offering this Pix Garantido or Pix Parcelado within the Pix infrastructure, but it is not an official product by the central bank. So central bank, again, as I said, they gave a step back on that to focus on security, to focus on the return mechanism, to focus on compliance and rules, and to get a good oversight of the system and to see the players. And they put this Pix Garantido official solution on hold a little bit because there are already players offering their own type of Pix Garantido as credit products and services.
Perfect. So we can expect more innovation both from the private sector and the central bank enabling credit over Pix or credit via transfer. And this is definitely an opportunity that we see going forward. So thank you, Sullivan. Excellent overview. We've got a lot of great questions. And I want to just take a moment to address some recurring questions for those of you who may not be so familiar with Pix. Pix is one question that has come up a couple of times is, what's the settlement time? Pix is instantaneous. It's real-time payment. That's another reason why it's quite popular among merchants, is because they receive funds in real time, as opposed to having to wait 24 hours to settle with their acquirers. There's another very interesting question about acquirers, which we'll get to at the end. But that's another thing that makes Pix very appealing, instant settlement. The other question that has come up more than once is, do you need a bank account to access Pix? The answer is no. In fact, most people access Pix through a non-bank entity. As Sullivan showed on the slide, there's over 900 institutions affiliated with Pix, including banks, but also neobanks, digital banks, wallets, fintechs, merchants, and others. And so it's quite, I don't want to say easy, but becoming an institution with a license to hold customer accounts is not all that burdensome in in Brazil, as opposed to other markets. So you've had a lot of companies be able to integrate with Pix and offer accounts to consumers. And that's really helped expanded access to digital payments in general, promote financial inclusion. Now you do need an account and you need to fund that account. Once you do that, you can use Pix for free if you're a consumer making payments. Okay, great. So thank you, Sullivan, and thank you for all the questions. Keep them coming. Let's move on as we go into our expansion of low-cost money transfers across the region. Pix has been so impactful at the global level. In fact, our recent analysis shows that in terms of volume, Pix actually exceeded in 2022 volumes of the other leading real-time payment scheme, UPI, in India in terms of volume. So it's made waves globally, and of course here in the region in Latin America, where we see this trend spreading and accelerating. So if we go on, what we see is there are over 30 real-time payment schemes in development across the region. Now, of course, Pix is central bank led, but more than 20 of these schemes are coming from the private sector across the region. And we have a large variety. There's private and public partnerships, there's central bank initiatives, there's bank-led initiatives, there's fintechs and closed loop systems, a huge variety, and it's quite complex. So we're going to try to break it down. Of course, this requires a much deeper analysis in order to make predictions. But to give us an overview, we're going to look at what's going on in the rest of the region. Now, of these 30 payment schemes, they've pretty much learned the basic ingredients to making an innocent payment scheme scale. Okay, we learned this lesson from PIX and watching other case studies, but those 4 ingredients include being free to send money, interoperable with other institutions, be available and instantaneous 24/7, and potentially most importantly, be mobile friendly. With these 4 ingredients, we find that this is what is the least common denominator for the success of a scheme. Now, it's not a guarantee that the scheme will succeed, but these are the 4 basic ingredients. And we've seen that mostly the region has learned this and implemented it. This graph here, the green countries are countries where the schemes in development have all 4 check marks on those ingredients. The dark gray, they have 3 out of 4. And so at the very out the gate, we see that we're starting with the basic ingredients needed for success in these markets. Okay, going ahead. Nevertheless, even though those basic lessons have been learned and implemented, the execution is really complex, and it's highly speculative whether or not other markets will experience the same level of success as Brazil. On this spectrum here, we have dark blue representing scale. So Brazil, the only other market that has really had a similar level of success is Costa Rica with their platform Simpe Móvil. We have some decent adoption in Argentina with Transferencias 3.0, although it has not yet really taken off at the level PIX has. We have schemes launched and pretty much stagnated or declined in Mexico, for example. We have RTP schemes announced. And when I say RTP schemes announced, I'm talking about central bank-led initiatives or bank consortium initiatives. Private schemes are a different animal, and we're going to talk about that in a moment. But we have RTP schemes announced in Peru and Colombia, as well as elsewhere. And then in other countries, we have interbanking and ACH, but they haven't quite achieved those 4 basic ingredients yet. So a huge wide range of both opportunity and risk here, depending on who you are in the ecosystem. We do expect Peru and Colombia to be the biggest contenders in potentially replicating PIX in the near term. Going on to the next. We get asked this question all the time. Why has PIX succeeded and others not? And the first comparison that people make is PIX and CODI, the QR code, instant free QR code scheme based on SPAY in Mexico. CODI was launched with a lot of fanfare and a lot of press attention and just failed to scale. And now you barely hear about it. So why did PIX succeed and CODI did not? These are what we've identified as 7 top factors to answer that question. Banks being involved in the scheme design process. All right, so an inclusive process to design and implement the scheme. A regulated UX, meaning the central bank mandated how people were going to access PIX, what the flow is going to be like, no matter what institution was offering it, so consumers could really learn and that could scale easily. That did not happen in CODI, where banks buried access to CODI under many screens and didn't necessarily make it accessible. Required adoption by financial institutions of a certain size. Another very important factor is in PIX, non-banks, including fintechs, wallets, and many others, were allowed to participate. This was different in CODI, where only regulated banks could connect to SPAY and participate in the scheme. Free to send money. The other one that's very influential is the ability for acquirers and PSPs to charge a fee to merchants who are accepting PIX as a payment. It's a low fee. As we saw, it's about 1% lower than any other payment mechanism in the market, but there is a fee there. And companies have flexibility to charge or not. They can choose what they're going to charge. And so this injected economic incentive into the system, which generated a lot of interest and unanimous buy-in into the platform. And then finally, an autonomous and I dare I say visionary central bank, really committed and steadfast to their execution. That's another reason why Costa Rica has had a lot of success. A dedicated, committed, autonomous central bank, free to act, free and empowered to act. So on the next slide, when we take those 6 or 7 factors and we measure them, we put them up against the schemes that are in development across the region, we kind of get an idea, the ability to potentially predict what might happen and which schemes we think are going to be successful and which may not. So we see a lot of red X's here. You guys will get this presentation so you can study this more in depth. But basically, if we take this model, which is just a model, right? There are many other factors at play. But if we take this model, we see that Argentina, Colombia, and Peru potentially have the biggest opportunity to really scale and have an impact. Argentina, of course, we have the dominance of Mercado Pago, which rivals the ability of Transparencias 3.0 to really scale, because in large part that need is being met already. But in Colombia and Peru, kind of fragmented ecosystems, the ability of the players to come together and create these systems could be transformative in these markets. So that's why we flag those two as the ones to watch. We go ahead. Moving on to a discussion of the private schemes across the region. Now, I like to say there's really no replacement for a strong and visionary central bank, which has been so influential in Brazil. But in the absence of that, we've seen a lot of success of private schemes led by a fintech player or a financial institution. Now, the central bank-led initiatives have achieved the greatest scale, PIX and SIMPE in Costa Rica. Beyond that, we have ATH Móvil from Puerto Rico, owned by processor Evertec. We see Yapi, P2P app in Panama, owned by Banco General, Yape in Peru from Banco BCP, DaviPlata from Davivienda, and Nequi from Bancolombia. So banks very much have been visionary and extremely influential, filling this gap. They've been willing to make the investment in P2P, which is a loss leader, with the hope that this will drive digital engagement, it'll drive loyalty, and it will enable merchant payments and increase and motivate formalization of small merchants, bringing them into the fold and expanding the pie of digital payments. That's what we've started to see in Peru. We've started to see that in Panama, still in very early phases, nothing like what we're seeing in Brazil. But it's a snowball effect that is starting to roll right now. And so again, that's a big opportunity and also a risk depending on who you are. There's still time to get ahead of it. There's still time to prepare for the disruption, but it is starting to accumulate that network effect. Okay, we continue. So some top lessons that we see when we're looking at how this trend is accelerating across the region. We see this as a global trend, but it is important. We see how this is impacting the whole region, but it's important to really realize the rest of the region is very far behind Brazil. It'll take time for this to fully come to fruition. That being said, again, Peru and Colombia are likely to implement true interoperability this year or next year. One step behind them, we think, is Central America. Low bankerization rate, high informality. This makes low-cost money transfers very attractive, especially to governments who want to promote financial inclusion, increase the size of the formal economy, et cetera. Now, cards are really strong comparatively in Central America. They're the one digital payment method that pretty much exists. We're starting to see fintech innovation and wallets start to take place, but this is a market that's very ripe for disruption. Chile and Mexico, we don't see immediate threat right now. They're high debit card countries. Debit card is, especially Chile, widely used, widely accessed, and no strong moves from market players or regulators to disrupt that. So these are countries that we don't see immediate potential for disruption. Okay. So moving right along, I know there's a lot of questions on this topic and we'll get to them. We're going to move into a discussion of open finance, and particularly open finance's ability to enhance money movement. So we're taking the conversation back to Brazil and back to PIX, if we go to the next slide. with a reminder of, first of all, open banking is still this nebulous term that very few people truly understand. And in most of the region, it's non-existent or in very early experimentational stages. Brazil is far ahead with some clear use cases. The rest of the region is still in a learning and experimentation phase. Okay, if we go and look at some of these use cases in Brazil, on the next slide, we have seen kind of two key areas in which, I almost fell over, two key areas in which open banking or open finance has been useful. The first is data sharing, right? Where consumers are presented with the option, do you want to share your financial information with other financial institutions in the hopes that you will eventually get a better credit offering or can share information across platforms. That's the first use case we think of when it comes to open banking. But potentially the more powerful use case, and what we're already seeing take place in Brazil, is payment initiation. This means that by sharing access to a user's account at a different institution, I can access that account and let the user interact with their bank on my platform, creating that intersectionality and that integration. That facilitates faster money movement, less friction, and empowers non-banks to participate in financial services at an even greater level. So to look at the PIX example, if we go to the next slide, PIX the Central Bank of Brazil has enabled a specific license for payment initiation. If you're Brazilian, you know that in a PIX purchase, the typical flow is I'm on the merchant's website, I select PIX as a payment method, I'm given a code, I have to copy that code, I have to exit the merchant website, I have to go to my online banking, put in the code, authorize the transaction, go back to the merchant website for the transaction to be processed, okay? It's not the best experience, a lot of friction in that experience. Now, that hasn't stopped Brazilian consumers from adopting this and using this and going forward with PIX. In fact, PIX has been very successful, as we've seen. But with payment initiation, that takes that redirect out of the equation and makes money movement even faster and more seamless, okay? And if we go to the next slide, when we look at the players who have been approved to be payment initiators, we see a lot of traditional financial institutions on the list of payment initiators, but we also see these platforms and fintechs and neobanks who essentially what you're able to do, if I'm in the Mercado Pago wallet, through payment initiation and open banking, I can bring money from another bank into my wallet without ever leaving the Mercado Pago environment. If I Banco Inter or PicPay, I can fund my wallet without ever leaving my PicPay environment. So it evens the playing field a little bit and creates swifter, more seamless money movement across institutions that enables a lot more opportunities for commerce going forward. This is still new and those use cases haven't necessarily been consolidated, but it creates the potential for any company to become involved in financial services and be a money sender, even if they're not holding the deposit themselves. It's a very exciting potential. And we'll look more into open banking tomorrow when we talk about the international stage in Europe, which has really been a leader in this space. We're starting to see really interesting use cases here in Brazil. Okay. So I know this has kind of been fast. We've charged you with a lot of content and we've really focused on PIX and money transfers. What I want to just in the last couple of minutes here is touch on what this means, a couple other trends for the payments industry overall. So on the next slide, we see that the reality is globally and in Latin America, there has never been more downward pressure on fees charged to merchants. This is great for merchants. Merchants have been paying 3, 5, 6, 7, 8% to accept payments for decades. For the first time, they have access to a low-cost payment method. What is this doing? It's reorganizing the competitive landscape and forcing companies to realize taking a commission off transactions may not be the best or the only way to make money in this environment. So this is really forcing acquirers to be innovative and look for new for new opportunities. Same with card networks. It's placing a premium on increased importance on value-added services and what else can I do to add value to my merchant to encourage them to use a payment method that has technology and innovation built in. So it's challenging the competitive environment like never before and really putting a lot of power in the merchant's hands. Just like what's happened in consumers, in the consumer world, it's now starting to happen for merchants. Okay. Similarly, what a trend that this will start to cause is with the economics. Basically, what we're seeing is a deterioration of the economics within the payments industry, specifically Brazil, and then starting to echo outward. With these economics deteriorating, we already are and will see increased investment flowing to cross-border payments, which are still very lucrative. It's a value-added transaction that has a higher cost, it has higher value to the user most usually, and we're seeing a lot of investment from all different types of companies trying to solve for and improve cross-border transactions, and there's still a lot of money to be made there. Okay, if we continue. Now, we all have experienced a little bit of a fintech crash. Crash is a dramatic word, but we're seeing a contraction of venture capital. We're seeing layoffs across the world. We're seeing it become more competitive. And with this phenomenon, we believe that banks have a new window of opportunity to lead digitally. Banks played catch up, massive catch up in the past couple of years with their digital platforms, and now can really compete with some of the neobanks and fintechs. And so we expect banks to be increasingly aggressive in the digital space and even investing more in white label digital solutions, working with providers to enhance their capabilities and even move into banking as a service themselves. And so we're going to see a little bit of a rearrangement of the fintech space in the region. And on the next slide, when we looking at fintechs, because of the declining economics, because of the crowding in the market, we probably are not going to see new fintechs serving consumers. There's already a huge supply of fintechs, wallets, and banks and we've seen that it's really difficult to make money. So probably new fintech innovation and investment is going to be towards serving small businesses and financial institutions, established financial institutions, getting them access to better credit scoring, digital identity, and the new digital capabilities that are required to navigate this new digital ecosystem. Okay. All right. So after those, looking at those trends, looking at what we've discussed today, kind of some major takeaways. Because of what's going on, we really see that companies need to specialize. All right. Payments are gravitating and evolving towards becoming a commodity, right? A highway. And so 2023 and beyond is really about matching payment experiences to specific use cases. Where is a credit card have competitive advantage? What about a debit card? What about a contactless transaction? What about an M-Pulse transaction? What about a QR or a PDP or a PIX transaction? What are the best payment experiences for your payment method? And we're going to start to see a channeling of payment experiments to specific use cases. Okay, to that end, verticalized solutions will be most competitive. Digital payments are now massively accessible. And so we now have to start competing in more niche areas, right? A hair salon has very different needs than a large department store, than a gaming platform. So we're going to see payment service providers and acquirers increasingly improve their vertical specialization and see a market rearrangement according to verticals. Moving to transaction-based business models, bundling services for merchants is going to be increasingly important instead of simply taking a commission on a transaction. And open finance and instant transfers are reorganizing the players in the ecosystem. Who is going to play in this ecosystem? It's very hard to predict in the next couple of years. Probably the landscape's going to look very different than it does today. And then finally, you know, we're really starting to see, this goes to someone's question that I love, new acquiring models are really needed to adapt to a low-cost money transfer reality. Acquirers are getting squeezed out of certain use cases and verticals, and they're going to be forced to reassess and figure out what their strategy is going forward. So those are just some risks and opportunities that we see. You know, it's really time to re-engage the affluent, re-engage large merchants who are dominating in terms of payment volume, making sure that in this competitive environment, you hold on to your best customers. Support the transformation of acquiring acceptance, invest in new payment services and identity services that'll be essential in this digital environment. So lots of opportunity, lots of risk, a lot of changes, difficult to predict, but hopefully this provided some clarity and some direction as to what's going to be going on in the next year and beyond that. So on that note, I know we have a lot of questions. We're about to get to them. I want to launch a poll because I want you guys to let us know, how can we serve you with this information? It's a very hard to predict environment. We want to know how you want to engage with us, how we can help you. So please let us know, how would you like to engage with us following this session? Are you interested in a paid market intelligence engagement that you already have a project in mind or a research project that you want to know about? Let us know. Do you want to have a consultation with myself or another practice leader at AMI to just deep dive and ask any questions about these topics? Maybe now is not the right time. You'd like for us to contact you later, maybe in Q2 at the end of the quarter. You'd like to make an introduction to someone on your team, or nothing right now. We'll just continue to be in touch through this type of session. Please take a moment to answer that poll and we'll follow up accordingly. We know how this information is dense and we want to help you make sense of it and deepen it where it's necessary for you. Okay. We'll just give it about 5 more seconds. Please take a moment to answer that poll. Great, thank you everyone. We can wrap that up and we'll follow up with you guys as needed. And so at this point, we can go to the next slide, a very quick promo for our coffee chats. Many of you have been asking us, when are you starting your coffee chats? They're officially launching February 27th. If you're not a part of our coffee chats, please scan the QR code to register. These are open meetings, unlike the webinar where it's just us talking to you. Coffee chats is a chance for you guys to actively ask questions and tell your stories and anecdotes. We have a different speaker every time, so please make sure to put that in your calendar and register. And so at this time, we're just about out of time. For those of you who can stay on, we're going to move on to our Q&A. And I'm going to invite our analyst, Andreas. Many of you know Andreas and are familiar with him, to come on and moderate the Q&A section. If you can stay with us, great. If not, you can catch the recording, and appreciate all the participation.
Awesome. Thank you, Lindsay. And hi, everyone. It's great to be here. Looking forward to moderating these next couple questions. The first question I want to bring up is towards Sullivan. And so how do you see PIX being impacted by the recent election of Lula, as well as the turmoil at the central bank?
Okay, thank you, Andres. Well, one potential risk that I see is the friction between the central bank and the government. Just to be clear to everybody, I saw on the Q&A, PIX was developed by the Central Bank of Brazil. So it is the regulator of all the financial system in Brazil, and they developed PIX. And right now, there is friction between the central bank and the new government, not because of PIX, because of they are fighting on the interest rates. That is also a responsibility of the central bank. But I see that this friction, the relationship can slow things a bit on the development of new products. Of course, central banks is still an autonomous agent in the country, but I see that this friction can possibly harm the development of milk products and the roadmap, to be honest. But I don't see any risk to Pix as a platform or as a payment method, especially because it's already so popular and so widespread. So I just see a little bit of risk on the speed of things.
Awesome. Thank you, Sullivan. And so here we have a lot of questions from the audience, further diving into Pix. So what would you, I'm going to pick this question. What would you say is the greatest feature of Pix? What is attracting consumers to really use it?
I would say that, of course, the user experience. People in Brazil, they were not used to have this type of seamlessly payment, real-time, instantaneous, and maybe more important, free for person to person. So this is a new tool that the population was not used to. And the timing also, I think that played an important role. Pix was launched in November 2020. So one of the, 6-7 months after the start of the pandemic. So people were at home basically during the lockdown. So they tried this new experience, and as it is a very good experience to pay with Pix, to receive payments with Pix, to send and receive money, they like it and they continue to use it.
Awesome. So moving on to the next question, and this is going to Lindsay. So Lindsay, how do you perceive central bank sentiment around the real-time schemes? Do you see the central banks swaying in support of or against? And have some follow-up questions from the Q&A on that.
Yeah, definitely. So there's definitely sentiment among regional regulators that Pix was a success and that Pix got a lot of recognition, and then we want to follow in their footsteps. Maybe not in following the exact model, but interoperability of accounts is the key goal that most central banks want to achieve. So it may not be, designing from scratch a whole new, transfer system, but enforcing and requiring interoperability between existing schemes is definitely on the table. That's what's happening in Peru, in which the regulator wants to require interoperability between Yape and Plin, as well as bank accounts. That's what was done in Argentina, requiring interoperability between fintech and bank accounts. And regulators have been instrumental in orchestrating interoperability going back more than 10 years by requiring acquirers to become interoperable. So merchants can accept all card brands with just one POS. The idea here is that you can accept all P2P apps with one QR code or one unifying system. And the challenge is, what is that unifying protocol? That's the challenge that most central banks are grappling with.
Awesome. And I think you answered one of the questions just right away about could private schemes disappear if these initiatives are successful? And so what I'm hearing from you is that they wouldn't. They're supplementing the system.
Yeah, nothing. And people ask, is cash going to disappear? I don't believe that anything is disappearing. Okay, there's always there's trends, there's declines, and there's increases. The world is big enough for demand in all areas. So, like I said, what I do believe is going to happen is that payment experiences are going to move towards specific use cases that are best matched to their capabilities. Now, PicPay in Brazil prior to Pix was a closed loop app that was an ecosystem that you had to have a PicPay account to access. Now with Pix, PicPay is now integrated with the rest of the financial system. They're not going away. They've been enhanced. Some people may argue with this, but they've been enhanced by Pix because now they're integrated with the wider. They've also lost some competitive advantage, but they're integrated with the wider ecosystem.
Awesome. And on that note, I think this is a relevant question for both of you. What have been the responses from the major card brands for both, the real-time payments that you're looking at, Lindsay, and then Pix for Sullivan?
Well, great question. Now, I would say the biggest response, Visa and MasterCard both have known that this trend was coming, and they have been both getting ahead of it in many ways. Possibly the most obvious way is the investment in real-time payment, their own real-time payment infrastructure. So both of them have products that that leverage their networks to enable money movement across debit card rails, very much in the same way that a bank transfer would, instantaneously, account to account, Visa Direct and MasterCard Send. And these are being used for remittances and for many other use cases, both in Latin America and a lot in the US and outside of the region. And so both of them are in the process of finding use cases and partnerships and enablers for their technologies, which have all of the fraud and the monitoring, the integration with the acquirers, all of that technology that's been built in over decades. So that's number one response. Another response is, partnering with fintechs because Pix, for example, is a huge enabler of financial inclusion, right? You open an account, you can use Pix. Most of those accounts also offer a debit card. And as you start to transact and as you start to get into digital payments, probably your financial needs evolve. And eventually you might need a credit card, or you're going to start needing other services. And so helping fintechs take consumers and merchants along that evolution and maturity journey is also another way they've been getting involved. And then also Visa Direct and MasterCard Send and are behind a lot of the P2P schemes we see, and they're actively working with banks and even central banks to improve the user experience and guide companies on how to really enable a seamless P2P process, where real-time ACH has not been implemented.
Awesome. Sullivan, not sure if you want to comment on Brazil, or we can move on to the next question.
I think Lindsay already addressed a lot of things on Pixel as well. I don't know if you want to know anything specifically about Pix on that matter.
Let's move on to the next question.
Okay.
So earlier you guys had talked about the case of Mexico and CODI not having taken off there, and gave some framework around why Pix was successful. Do you believe that CODI is dead in Mexico? Could this still be a threat?
Great question. Guiche, great question. Do I think CODI is dead? For the time being, I really do think it's dead. I haven't seen or heard any news about CODI. I haven't heard about any investment or plans from the central bank to try to evolve CODI. When you talk to Mexican consumers and merchants, CODI's like, no, I don't, it doesn't, no existe. Does it have potential? Absolutely. I mean, Mexico has one of the most advanced real-time payment ACH schemes in the world with SPAY. It just hasn't been very good at marketing itself, and it hasn't been good at translating that to a user experience that consumers and merchants can easily use. Now, SPAY is increasing its share of payment for e-commerce and transactions. So I think probably that is where I would see the trend moving, and maybe some new functionality, maybe by a fintech, to make SPAY more user-friendly. I think that would probably be my prediction, thinking about it just right now in the moment.
Awesome. Sounds like the right direction. Okay, so let's go back to Pix. Sullivan, what has been Pix's latest approach regarding cross-border payments, and how is that developing?
Okay, so the thing about the central bank in Brazil is that they never really disclose everything when it is still in development. They talked about cross-border payments and using Pix infrastructure to cross-border in the future, but it isn't clear yet how this will happen, how this will work. They just talked about that it is also on the roadmap and they are thinking about this, but there are no concrete solutions regarding cross-border payments yet. And that, I believe, also answers another question regarding card payments. Pix cannot support cross-border payments yet, and card payments, it's a very great share for card payments. So I believe that this already answered that too.
Great, thank you. And so here's a next question about Pix. And so what do you think the main challenges are for companies if they enable Pix as a payment method in e-commerce? And I think that ties well with other questions that we have on what fraud issues are happening, or what fraud issues are apparently happening under Pix.
Okay, so first, for e-commerce, if I'm a company and I want to accept Pix in e-commerce, first of all, I need or a provider, a PSP or stuff like this, that is indirect or a direct participant in the Pix system, or I can be a direct or indirect participant. Of course, this requires a lot of effort, a lot of investment, a lot of internal people to work on this because it's very demanding technically. But if I'm using a PSP, there are a lot of PSPs right now in Brazil offering Pix as a payment method. So you need to guarantee that this PSP supply all the information that you need with your reconciliation systems. And that's the problem right now. It is starting to appear companies providing Pix payment services with reconciliation tools, with ERPs integrations, but there are just a few yet. And that, I think, it would be the main problem offering Pix. And also the reversal, the giving back to the customer if any problems happen, anything like that. You don't have a simple mechanism to send the money back to the consumer if some problem happened. So I believe that is the main concern for merchants. And regarding fraud, there were a lot of problems in Brazil because Pix is so easy to use and there isn't any type of reversal. So if my phone got stolen and someone can wreck my phone and access my bank account, they can empty my bank account real time. Of course, there are new solutions by the banks, by the financial and payments institutions towards security, biometric ID verifications, things like that. But this was very common at the beginning of Pix. And also when Pix was launched, there wasn't a very good security layer from the banks towards Pix. But right now, this problem is getting solved. There are new solutions, new types of things that the banks are supplying to the customers to have a more secure environment regarding Pix. So this is the type of fraud that we saw, but I don't think that the market experienced any type of fraud like on purchases and things like that. It was more on the stealing money from stealing, sorry.
Great. Well, thank you, Sullivan. And Lindsay, I think a fascinating question came in, and I'd love to hear your opinion on this. So how do you see buy now, pay later and interoperability going forward?
Yeah, we didn't really talk about credit that much, buy now, pay later, but great question. So buy now, pay later, I assume, buy now, pay later kind of has been around for a long time in Latin America through credit card installments, but I assume you're asking about buy now, pay later fintechs, right? Who are out offering non-card based installments. Now, their huge challenge is interoperability. They're not interoperable, and that requires them to, their biggest challenge is accessing merchants. And so going merchant by merchant by merchant, trying to onboard them. So they're very interested in partnerships with acquirers and other merchant aggregators to get embedded in that checkout flow. Now, if we were to talk about interoperability of buy now, pay later company, that is, I don't think I've ever even thought about that. If I have a Klarna account and I can shop at a merchant that has Addy or something like that, I don't, that would be quite complex. It would require a big regulatory push to homologate is the word I was thinking in Spanish. Those processes, but it could really help accelerate buy now, pay later and access to credit. And really that's what Pix Garantido will do if and when it's enabled, right? Through any Pix transaction, I can finance it according to my whoever is the holder of my account. So that would be the competition to that there. And buy now, pay later might have a lot of a steep competitive curve to climb there if and when that gets launched.
Interesting hypotheses. Thank you, Lindsay. Here's another latest question we got. So what is the largest threat undermining cross-border transactions? We don't see that with Pix, but what are your thoughts?
Right. Hi, Pedro. Good. Thanks for the question. I don't know if there is anything undermining cross-border transactions other than the status quo. Cross-border transactions are still very highly concentrated among a few players who charge high fees. The World Bank, I think it's the World Bank came out and said, look, we want it to be a global standard that remittances are charged no more than 3%. And the average fee, even in the US to Mexico corridor, one of the biggest corridors in the world, is 5% or more. So friction, long wait times, high fees, fragmentation, poor user experience, those are all currently undermining cross-border payments. But it's as I said, more and more investment is flowing into both remittances, B2B, payouts. So that nut is getting cracked slowly but surely. It's just a matter of time, and day by day it's improving and there's more options available. So it's a matter of time for those solutions to scale and consumers to become increasingly comfortable with them. So I don't think there's anything undermining them other than just the dominance of status quo players.
Awesome. Thank you, Lindsay. All right. So Sullivan, coming back to you with some Pix questions. So talking about acquires, which we briefly mentioned. So with merchants and small businesses favoring Pix, do you see them bypass? Do you see the role of the traditional acquirer kind of going out of date, or they'll be bypassed to so those fees don't have to be paid? What are your thoughts on that, Sullivan?
Yeah. It's more cost effective to offer Pix as a direct type of payment, but there are acquirers already offering just a few. This is not widespread as card payments, but for example, there are some acquirers on the POS. The merchant can generate the QR code and receive for that transaction using Pix. But on the POS that you generally use for card payments. So the acquirers, they already saw Pix movement of course, and they know about the importance of this payment method. So they are trying to update their hardwares and their systems to also offer this type of payment. But of course that I believe that this is more on the consumer behavior side, how the consumers will react to this type of new payment. And of course that for acquirers, and especially in Brazil, I would say that installments and credit is very important. So Pix doesn't solve that problem yet. And I believe that there are still opportunities for acquirers and traditional card players to work on that front, and also to enable Pix and to offer this type of payment that's obviously very important to the country right now.
Great. And so going on the payment initiator side, what innovations do you see them bring or impacts do you see them bringing into physical commerce?
On the physical commerce, I don't see any specifically innovation on the physical commerce for payment initiators, because it's just like in-store payments, they are already very mature. I can see only the payment initiators enhancing the experience on the digital environment, but not on the in-store payments. I don't know about you, Lindsay. How do you see this?
Yeah, it's a great question. And I think the trend we're going to see is that there's this blurring of the line between card not present and card present, right? Because if you're in store, you can still make an e-commerce or digital transaction. If you're making a transaction through a code or a P2P, a phone number, without any intervention of hardware, you're really making a digital transaction, even though you're in store. So payment initiator, I could envision use cases in which, I want to send money, or I want to bring money from this account to pay at this merchant. It might empower wallets like PicPay or other wallets. Okay, I like this wallet. I want to use this wallet. I get my payroll account is in Itaú. So I want to bring my Itaú money over to this account to make the payment in store. It's still a digital transaction. Now you're in store. That's just one example I thought of on the fly, but it's a great question that we should continue to watch, with the understanding that this in-store e-commerce line may not really be valid for very much longer.
Awesome. Totally see that.
So Andreas, we still have about 75 people on the line with us. That's excellent. We are, let's take two more questions and wrap up, so we don't go too much over time. Thanks everyone for your questions. So I'll leave it to you, Andreas, to pick the next questions, and then we'll wrap up.
Okay, great. So I'm going to go with going back to security, because it's kind of hitting two birds with one stone. Regarding Pix, how do you deal with compliance and KYC screening? And is that applicable in small markets, keeping in mind operational costs? Yeah.
I think that I don't know if I understood right, Andres. KYC and compliance procedures regarding central bank or the customers? I don't know if it is.
So I believe it's
it's not quite clear, right? How do you deal with compliance and KYC screening? So in an environment where you can onboard digitally and start to send money instantly, it's important to have strong KYC. But you also can't have too strong KYC, because now you've ruined the frictionless experience that was intended to be created. So it's definitely a give and take scenario. We're seeing a lot of innovation in digital identity and very light, frictionless, easy KYC processes. And wallets and banks having different regimes in which they, I can approve transactions up to a certain amount. So there's regulators are starting to better enable digital and digital onboarding and seamless transactions. I think everyone is still learning. What are the required thresholds? What are the security mechanisms that are required? And banks fintechs and others are starting to more easily work with fintechs who offer PII analysis, who offer a really easy KYC. So it's absolutely an industry completely under transformation and evolution. I'm not sure if that fully answered the question, but those are just my top of mind thoughts on that subject.
Yeah, and on that matter of KYC and compliance regarding the central bank and the players in the PIX environment and the national financial system environment, I think that the most important thing right now is that the central bank, the regulator, it has only visibility about the direct participants and the indirect. They cannot fully see the other layers. And there are some use cases that you have the intermediary, another intermediary providing services to different companies. So this complex web can possibly harm the financial system, can be a threat to the regulator itself. So that's why we mentioned earlier that they are reducing the regulations to have more direct participants and more indirect participants to minimize the number of players that are on this gray area where they cannot fully oversight and fully have control about what's happening.
Awesome. All right. So this last question, I think, is an interesting situation. Tourists and people who are not, who choose not, or who do not have access to PIX, are they getting an overall worse payment experience now that PIX is ubiquitous?
I would say that yes, because not because there are only places that only accept PIX, but I would say that yes, because first of all, they will need to handle cash in some places. Of course, not urban centers, but thinking about tourists, they might go to far places or not urban centers. So they will need to handle cash. And of course, this has a lot of troubles that they can have. And also they cannot fully, they cannot fully understand how the payments are for Brazilians, and they cannot have discounts and promotions that are very common on PIX right now. So I would say that yes, but not like you still can come to Brazil and enjoy, but you have a different experience than Brazilians, for sure.
That's a great question. I love that question. Mostly when you travel internationally, you count on your cards or cash. Most countries don't yet have a dominant local scheme that tourists don't have access to. So it's a very interesting question. Thanks for that. Thanks, Sullivan.
Yeah.
All right. Well, thank you. Excellent session, guys. Really appreciate you hanging in there for the Q&A. Just a reminder to everyone, the materials will be shared, both the slides and the recording, in the next couple of days. So watch out for your inbox for those materials. And please join us tomorrow, same time, same registration link. You don't have to re-register. We'll be talking about these same trends, but at the global level. So that'll be really interesting. We're going to be making connections back to Latin America, and you'll get an even more flavor for how these things are evolving in Latin America and beyond. So excited to see you all there. Thank you, guys. Looking forward to talking more in depth, and we'll see you soon. Appreciate you.